NIO, those earnings are out, the deliveries are reported. What stands out to you in the report? What are people watching?
Nicole, I would say all in all, these results were fine. I think the bar was set pretty low for NIO given its underperformance in the broader EV space this year. So I think that right now, seeing the fact that they were able to post better than expected third quarter results was seen as a pretty major win for a company that needed this love today. Now, we did see a net loss of around $542 million from sales of almost $2.6 billion in their third quarter. Street was looking for about $600 million on sales of $2.6 billion, so that figure was in line.
Performance, challenges, and reality. What may look like a promising start for NIO in January 2024 turned out to be a tough month for the Chinese electric vehicle maker. Despite recent fluctuations, the stock saw a significant decline, echoing investor concerns about the company's performance. With NIO facing intense competition and economic headwinds, the question remains, can NIO overcome these challenges and bounce back to its glory? It hasn't been smooth sailing for electric vehicle stocks lately, particularly for Chinese player NIO. Over the past 6 months, this company has seen its stock prices plummet by as much as 50%. January was no exception, with NIO shares dropping by 38%. Despite reporting record deliveries in December 2023, the optimism quickly faded as investors reacted to mounting challenges. Intense competition, especially from industry giants like Tesla and BYD, has eroded the pricing power of smaller EV makers like NIO. The smaller companies feel the pinch with larger players slashing prices to boost sales. Moreover, China's economic recovery has hit a roadblock, leading to a slowdown in consumer spending, including on expensive items like electric cars. January vehicle sales numbers reflected this trend, with NIO delivering significantly fewer units than the previous month. While the Chinese government is implementing stimulus measures to spur consumer spending and economic growth, the road ahead remains challenging for EV makers. NIO reported a substantial net loss of over $600 million in the third quarter, with XPeng also posting significant losses. Despite its financial struggles, NIO has substantial cash reserves, providing cushions as they navigate tough times. However, achieving sustainable profitability remains the key to long-term success for the company.
Yeah, if we could get a 5-year chart of NIO up on the screen at some point, I think it'll illustrate this nicely. But there really hasn't been a FOMO feeling in NIO since like January of 2021. This stock, and I remember when it first became public, back, several years prior, it was really your first pure play EV outside of Tesla that you could invest in. And it was a Chinese company sort of positioned, and it had a lot of like similarities. The cars look kind of like Teslas, a little bit more in the luxury space. It was seen as the Chinese Tesla, and it led to this massive run up that we see. Of course, it's also around the pandemic time where a lot of these type of names were doing better, but it's just slowly giving it all back.
Now, there have been speculations that NIO could stage a remarkable comeback in 2024. However, a thorough examination of the company's performance suggests otherwise. Despite a recent 10% rally in NIO stock this month, it wasn't driven by any company-specific catalysts, but rather by a broader market rally in Chinese stocks fueled by government intervention. Redmond Wang, chief China strategist at Saxo Markets, highlights the ongoing challenges facing the Chinese market, including a distressed property sector and fiscal constraints of local governments. This intervention hasn't fundamentally altered NIO's trajectory, especially considering its history of consistent unprofitability. NIO's recent EV delivery statistics paint a bleak picture, with a significant 44% plunge from December 2023 to January 2024. Additionally, the company only captured a minuscule 2.1% share of China's new energy vehicle market last year. This underscores NIO's struggles in a highly competitive EV market, where selling luxury vehicles amidst low demand poses significant challenges. In a desperate move to boost sales, NIO has unveiled versions of its vehicles with reduced driving ranges. While these versions may be sold at lower prices, it remains uncertain whether they'll appeal to consumers, especially those concerned about range anxiety. Moreover, according to analysts, it has been a past favorite in a fiercely competitive environment, particularly in the coveted Chinese EV market. While the company's growth potential remains enticing for long-term investors, concerns about Chinese economic growth have dampened some of the optimism. Despite NIO's impressive monthly delivery figures, a closer look reveals challenges in sustaining strong EV sales amidst tough competition. While some may view NIO's recent stock bump optimistically, the longer-term trend has been generally negative. Analysts, however, still maintain some optimism toward NIO, with forecasts averaging an upside of more than 80% within a year. However, there are varied opinions on the stock, with some cautioning against its current risks. NIO's stock performance has seen short-term improvements but remains uncertain, with potential geopolitical risks and a weaker growth outlook in the near future. The company's dynamic strategy contrasts with mixed operational outcomes, including significant operating losses despite increased vehicle sales. While NIO's low price-to-sales ratio may attract some investors, geopolitical uncertainties and growth concerns in China suggest a cautious approach to investing in the stock at present. Meanwhile, Wall Street analysts have observed a challenging period for the electric vehicle industry over the last 60 weeks, marked by a demand slowdown and manufacturers adjusting prices to accommodate hybrid models. This adjustment led to significant declines in EV stock prices, with Tesla facing predictions of a potential crash to $23, Lucid losing its Nasdaq 100 spot, and a notable decline in Tesla's sales in South Korea in January 2024. However, there's been a recent uptrend for some EV makers, including China's NIO, which saw a nearly 5% rise in the last 5 days after months of continuous decline. The rally in NIO stock can be attributed to several factors, including remarks from Jerome Powell indicating the Federal Reserve's intention to cut interest rates and positive developments within the company itself. In January, NIO announced a comprehensive 5-year agreement with Contemporary Amperex Technology, or CATL, a leading Chinese electric battery company. Additionally, the company reported a strong delivery performance for January 2024, showing an 18% increase compared to the previous month. Despite recent positive developments, there's a degree of uncertainty reflected in Wall Street analysts' views on NIO. While there's a generally bullish sentiment, with analysts forecasting an 81.27% surge in NIO stock within a year, there's a lack of unanimity in their ratings. NIO is ranked as a moderate buy, with 6 buy ratings and 4 analysts remaining neutral. Furthermore, there's a wide range of price targets, from $8 being the lowest to $18.70 as the highest. However, all 10 analysts foresee an upside for NIO compared to its recent price of $5.82 on February 9th. Despite these positive forecasts, NIO's stock performance has been mixed. While it's up 4.68% over the past week, it experienced a decline on February 8th and has seen significant declines over the past month and year. NIO's stock has declined 30% since January 1st, 50% in the last 52 weeks, and 40% on the all-time chart. But before we move on, we just want to thank you for watching this far. So, where does NIO stand in the fiercely competitive electric vehicle market? Well, NIO's journey hasn't been without its challenges. The company faced a slowdown in deliveries over the past couple of years due to various factors, including supply chain disruptions, market pressures, and intense competition, particularly in China, where Tesla's aggressive pricing strategies added to the strain. Despite these hurdles, NIO continued to invest in its unique battery swapping technology, a feature that sets it apart from other EV manufacturers. However, while this innovation garnered attention, the high costs associated with building and expanding its battery swapping network led to significant operating losses. Analysts predict a challenging outlook for NIO, with expectations of widening net losses and a negative operating margin, painting a bleak picture of the company's financial health. With a debt-to-equity ratio of 5.2, NIO faces added pressure from its financial obligations. The road to profitability seems daunting, but there's still a glimmer of hope. In an optimistic scenario, NIO could stabilize its operations, improve US-China relations, and expand into new markets like Europe. If it can achieve a fraction of Tesla's valuation, with a modest growth trajectory, it could reach a market cap of $1 trillion by 2050. However, such lofty ambitions come with considerable risks. NIO would need to navigate a highly competitive market, fend off numerous rivals, and prove its long-term viability amidst a rapidly changing industry landscape. With over 200 EV makers vying for market share, including tech giants like Xiaomi and Huawei, the road ahead for NIO is uncertain. Investors should approach NIO cautiously, focusing on its ability to execute its growth strategy and overcome its operational challenges. While the prospect of NIO joining the trillion-dollar club is enticing, it's essential to temper expectations and consider the company's current market position realistically. So, what do you think? Is NIO's potential worth the risk, or are there too many obstacles in its path to success? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO's stock forecast, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.